Welcome to Cortburg Speaks Retirement, an audio podcast about investing in the stock market, financial planning, money management, and retirement planning. Each Wednesday, we help investors at all stages of life learn how to potentially grow and preserve their money from first job through retirement. Now here's your host, Miguel Gonzalez.
Good morning and welcome to the Cortburg Speaks Retirement audio podcast. On this week's audio podcast, I discuss the differences between estate planning and asset protection. Estate planning and asset protection, are they the same? You may sometimes hear the terms estate planning and asset protection used interchangeably. They actually have different meanings, and it is important to incorporate both strategies into future financial plans. Below, I discuss key differences between estate planning and asset protection, as well as the optimal occasions when you should consider each wealth preservation strategy. Let's talk about estate planning. That's focused on the future. Estate planning largely focuses on what happens to your assets after you die. An estate plan can include some or all of the following documents: last will and testament, trusts, guardianship documents for minor children or other dependents, and powers of attorney. Properly executed, these documents can ensure that deceased persons or testator wishes are carried out seamlessly. Now let's talk about asset protection. That's focused on the present. Asset protection strategies are proactive and focused on the present. They protect assets from being seized or dissipated by others during their lifetime. Common asset protection strategies include prenuptial agreements, postnuptial agreements, and trusts. Asset protection strategies can be implemented immediately. For example, assets placed in an irrevocable trust belong to the trust, not the person who contributed them. This means that if you or your business are ever sued, these trust assets aren't available, meaning they're not available for seizure or attachment, even if you're ultimately liable for the judgment. Keeping assets in a trust can also help you qualify for Medicaid if you do not have enough funds for long-term care or would like to retain assets to pass to your heirs. So when do you need estate planning and asset protection? I get that question all the time. Ideally, estate planning and asset protection can find ways to work together. You may even include an asset protection plan as part of your ultimate estate plan. However, there are some timing factors to consider. First of all, engaging in an asset protection strategy after your assets are at issue can backfire. For example, if you do not have a prenuptial agreement and begin to set aside assets only after your spouse has filed for divorce, it is likely that the judge will consider this an improper attempt to hide or dissipate marital assets. Similarly, if you're interested in qualifying for Medicaid and then sign over your home to your spouse or your child, you'll be subject to a look-back period. You will not be able to qualify for Medicaid until after this period has expired. Finally, if you begin giving assets away to loved ones after a legal judgment has been entered against you, your creditors may be able to come after your loved ones for these assets instead. This means there is no better time than the present to create an asset protection plan. Once this plan is in place, you can work on your estate plan, which is generally less time sensitive. Although there is some overlap in asset protection and estate planning strategies, the focus of each approach is very different. By considering both these strategies and putting them into place as soon as possible, you may help protect your wealth both now and in the future. Also, make sure to visit our website, www.cortburgretirement.com. Our site is filled with educational videos, ebooks, publications, and financial calculators designed to help you learn more about your finances. As you search our site, send us a note regarding any questions you may have about any particular investment concepts or products, including estate planning and asset protection. We will get back to you quickly with a thoughtful answer. This is Miguel Gonzalez, Certified Retirement Counselor and Managing Partner with Cortburg Retirement Advisors, signing off for this week's educational podcast.
The opinions expressed and material provided are for general information and should not be considered a solicitation for the purchase or sale of any security. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision. Securities offered through LPL Financial. Member FINRA SIPC. Investment advice offered through Private Advisor Group, LLC, a registered investment advisor. Private Advisor Group, LLC and Cortburg Retirement Advisors, Inc. are separate entities from LPL Financial. Investing involves risk, including possible loss of principal.